technical issues. We can't turn on Catherine's camera.
That's okay.
But
I'm okay.
I'm going to be sharing my screen a lot anyways, so
Okay, perfect.
should be fine.
All right, so let's get started. So today we are going to be looking at the operational dynamics and attributes of Morrison Publishing. So, but before we get started, I just want to do a brief introduction. So some of you on the call may have already met me. My name is Catherine Jones, and I am the investor relations manager. So if you have any questions, you can always ask me these questions and I will try to get you all the answers. If not, if I don't have the answers, then we will defer to Gus, who will provide us all the answers. So Gus Van Dender is the president of EQK, and he is going to be presenting a lot of the information today. So we're going to do it kind of like a Q&A style. So I'm going to ask him different questions, and he is going to present some of the information that we listed in the email. For those of you who didn't actually read the email, we're going to be going over the operational dynamics and attributes of Morrison Publishing, assessing how they complement EQK's ambitions and portfolio. We're also going to be looking at the critical assets obtained from Morrison Publishing, highlighting the pivotal contribution to our strategic development. And then we're going to look at the vast potential within the knowledge commerce arena and scouting for entities mirroring Morrison Publishing's profile for prospective acquisition. So we've got a pretty big full plate. So what I'm going to say is if we could get you, Gus, to give us a little bit of background about EQK before we get started, that would be brilliant.
All right, yeah, let's start there. So EQK is a holding company that we created here at Toolbox to kind of carve out a specific vertical inside of our bigger portfolio. In a way, it's just semantics, right? Ultimately, it's same owners, same teams working, but for the sake of investment and these loans and these convertible notes, it's a lot easier to say, look, this is what you're investing in, and the security or the note is backed by this, which are very simple companies with very simple P&Ls, with already producing EBITDA profit, and we have a three-year track record for all these companies, right? Now, of course, that fits in the bigger picture of Toolbox, but that's a way more complicated holding company with close to 100 companies. Some are, venture capital, where we invest a lot of money still building software. If you would want to do due diligence on that portfolio, it would probably take you a couple months to just understand what's going on there. So we created EQK as a separate holding company that holds 4 assets right now, and we're going to add 10 to 15 more this year, depending on how quickly we raise capital and also how quickly these assets are producing cash, right? Because there's going to be a tipping point where our assets produce so much cash flow that we don't really have to do these notes anymore. So that's what EQK is. EQK is a holding company that we specifically created for companies in what we call the info industry, meaning online coaching, online education, and we're also considering some marketing distribution channels that if we acquire them, obviously we can control the cost and optimize things. For example, we're looking at a company who does paid advertising through YouTube and Facebook. So instead of having to pay an agency to run ads for us, obviously with a markup, we can acquire the company and then we have our own agency to go do that. So that's what EQK is. We're going to continue to buy and acquire companies within that space. Again, a very simple business model. There's a course, there's education, online education that people can subscribe to, oftentimes with a community, always independent of the figurehead, right? Obviously, because we can't, if we acquire that company and the course and the education is highly dependent on the main person, then we can't acquire that unless they keep doing that, right? There's a lot of coaches who do one-on-one coaching, very high ticket, pay me $10,000 and we'll do one call a week. We can't acquire those businesses, obviously, unless they have what we call an evergreen program where it's all recorded. You get access to a bunch of videos. You pay for that. You get the education. There's some community built around that. That is something that we can take over and keep promoting, right? But most of the companies that we already bought and we're looking at have that program and a list of people that we can promote other things to. And that's it. It's super simple. Very little overhead, very high profit margins, to the tune of 75–80% profit margin. And you'll see that when I show you Anthony Morrison's P&Ls. And that's the type of businesses we're adding. Very easy to scale, very easy to see the economy of scale, where the same team can send an email to 100,000 people or to 2 million people, right? And if you send it to more people, of course, you're going to sell more. But we don't have a higher overhead to do that. So that's what EQK is.
Now, you mentioned that you have 4 companies that are already in the holding. Has this capital fundraiser been, has the money from this acquisition, has it been used on all 4, or was that only just the one, correct?
Oh yeah, no. We just the last one, Anthony, we've used some of the capital.
Okay.
And but the other 3 came from other sources, mainly our own funds.
Right. So anyone that's getting into this promissory note, they are already given access to 3 companies that they wouldn't necessarily have. That's where some of the profits is coming from already.
Yep. And of course, we did that because we wanted to create a bit of a buffer, right? So to not put too much pressure on the new acquisitions. So for example, for Anthony Morrison, the very interesting deal where we made a down payment, and we strongly believe that the company itself will produce enough profit to pay off the rest of the money that is owed to the seller. So he basically gave us the asset before we paid the agreed upon purchase price.
Nice.
And the asset itself will likely produce enough to make the payments to him. It's almost like a seller financing deal, right? Now, of course, if when we raise more funds in the meantime, we'll do a combination based on my forecasts of what's going to happen and making sure that I'm almost 100% sure that I can pay the notes back, right? Because it's just a game of finance at that point, right? Where I see how much cash is going to come in, how much am I going to put in to finish the acquisition free and clear, because that's our money with no interest, and then how much am I going to use from the notes to make that come out in a safe balance where I will have plenty of money to pay the notes back with the interest that we've promised.
Right. And so let's actually just touch a little bit on that. So on the promissory notes, right now, the promissory notes are either 2-year or 3-year notes.
Right.
And anyone that's investing, the minimum investment is $50,000. And if you're investing $50,000 on a 2-year note, you would get 16% interest. And that interest is paid out on a monthly basis, correct?
That's correct.
Right. And then on a 3-year note, same deal, except for on a 3-year note, you would get 18% and it would be paid out on a monthly basis. So in the information pack, we actually have a table so you can see what the payments would be. Where it becomes even more interesting for investors is at the 250,000 mark. because at the 250,000 mark, a 2-year note pays out 18% and a 3-year note pays out 20%. So the most common question that we usually get is, what is the collateral on those notes? So could you explain a little bit about how that works?
Yeah, absolutely. Before I do that, do you want to try your camera again? I made some changes to the settings. It potentially could work now.
Sorry. Nope.
No? Okay, maybe next time. That's okay. We'll just keep doing it this way.
No worries.
Yeah, so the collateral, it's an interesting answer, right? Obviously, in my opinion, personal opinion, the having a company that is producing EBITDA is a very strong collateral against the notes. Now, a lot of people don't consider that collateral. They only think about, real estate as collateral, or a car or something tangible. So my answer is the companies that we're buying, the portfolio that we already have, is the collateral for the notes, right? Because I wouldn't buy the company if it didn't meet the criteria to pay back the notes. Could that company do less than I expected? Of course. But the house that you buy as, or the house that you get as collateral against your loan could also, go upside down. And I know a lot of people, friends of mine, who lost their shirt on multifamily investments over the last couple of years, right? So technically, you could argue that a company is not collateral for a loan, but from my perspective, it's a stronger collateral than anything else, because I can control it a lot better than anything else. I can't really control the value of a house, right? It's very dependent on the market, and there's a lot of things that are out of my control. Of course, I can upgrade it. Of course, I can, there's things I can do to control it a little bit. But if the market tanks and all of a sudden something changes in the area where the property is, that value is going to drop, right? Longer term, never. Real estate always goes up. I understand that. But as collateral for a 2-year note, personally, I would trust the business a lot more. And of course, that's personal, because I'm an entrepreneur. I know how to make businesses work. But that's really the answer. The collateral for the loan is, one, the company we're going to purchase next with your funds, but you can also think about the portfolio, those 3 companies that we bought, that are not tied to the notes, as a backup. And of course, it's a convertible note. So in the worst case scenario, if everything else goes wrong, which I doubt, but if it does, your note is going to convert in equity in the EQK holding company. So now you own, you have ownership in that portfolio, in all the companies that we're going to acquire. And of course, if that were to happen, we'll have a third-party evaluator do an assessment of what the value of that holding company is, and you will get shares in that company, in relation to your investment and the value of that investment.
Right.
So that's the collateral.
So it's a convertible note, and you would get shares in the EQK holding company, which would translate into those. Now, I've had a couple of these questions before, which is, can we purchase equity in EQK now, or is it only promissory notes?
Yeah, only promissory notes.
Only promissory notes.
I
Okay.
get the question all the time. I know.
Yeah.
It's a pretty cool and lucrative deal.
Yeah.
Yep.
All right. So on that note, maybe we could jump into Morrison Publishing to see how these companies actually operate, because some people may not know how the coaching business really works and
Yeah.
the type of finances that they have.
Yeah.
So could you give us a little bit of a rundown on Morrison Publishing?
Yeah, absolutely. I'll start sharing my screen here. I also want to share something that I didn't share last week about free ebooks. Go here and then share my screen. There we go. That's the proper there. So I just wanted to show you guys real quick what asset we purchased, right? Free ebooks was not even on our radar. It was presented to us by one of our advisors, partners. He said, "Hey, this is a massive lucrative deal for you guys because you can buy it for cheap because the current owner doesn't really understand the value of this, and we can make a fair offer, but we can turn this around into, in my opinion, a gold mine." And after I explain what we're doing, you'll see what I mean by that. This is the graph of the free ebooks website, right? And it shows you per day how many people register. So basically, let me pull up the website, right? freeebooks.net is a website that gets a lot of traffic every single day. And the only call to action, we're redesigning this whole page already. I don't like it, but it's it's working, right? So we don't want to change too much. What you do is you put your email address in here and you subscribe to be able to download 5 ebooks per month, right? And then there's an upsell. You can pay $47 for lifetime unlimited downloads, right? There's a couple things that happen here. But
Lifetime unlimited.
yeah, yep,
Nice. Okay.
for a one. But yeah, again, it's a little silly that this website or this website hasn't been monetized better, right?
Mhm.
Because look at this. 1,748 new registrants, new emails in one day.
And how much marketing does this company do?
Nothing.
Wow.
This is all organic through search, links from other pages, right? So we do zero marketing, but
Right.
we collect around 1,000 new emails every single day. And
Right.
I'll show you in a bit what that means for us, right? Um, every single day, there's over 1,000 people putting their email address in here, selecting whether they're an author or not. You can see here the authors, right? The red line, that's the number of people that say we're authors.
Yep.
So obviously we're gonna add some stuff here to get a better idea of our audience. We're gonna start promoting things to these people and start monetizing this list because there's so much lost opportunity here. Now, free ebooks, when we purchased it, had zero profit, $10,000 in expenses, $10,000 in sales from small offers, and then the upsell to the 47 VIP, right? That's really all they had. So we were able, because there was no revenue, companies are based, or value is based on EBITDA. There's no EBITDA. It's actually, it was a loss. So we were able to purchase this asset for a really good price. But since this fits into what we're already doing, we're going to be able to generate a lot of profit from this asset.
Right.
Just wanted to share that real quick. Let's go to Anthony Morrison. If you don't know Anthony Morrison, he's been an online educator for a long time. It's very interesting to me how a lot of these folks are considered celebrities in the space, right? Mainly among other coaches and marketers, because we all know their names. But then if you ask somebody on the street, do you know Anthony Morrison? They're like, no, I never heard of him. Even let's call out the biggest name, Tony Robbins. He's like, super big name in the online coaching industry, but not everybody knows him. He's not that big of a celebrity compared to an actor or a singer or, right, a band. So it's very interesting to me sometimes how internally these names are really big and they have big followers and they make a lot of money, but they're not that, they're not that celebrity status is very, very limited to a small group of people, a couple million people, right? So this is Anthony, and his a website. That's his story. He's been an entrepreneur forever. He wrote a book, and he created software. And the for him, he was getting tired of the affiliate game because it's as lucrative as it is, you still have to know what you're doing. And it's very easy to be taken advantage of, especially when you have a list of 2 million emails, right? Because everybody wants you to promote their products, but then they don't, reciprocate that offer. And all you're doing is burning your list and sending offers to your list, and nobody ever gives you new email addresses by promoting your offer to them, right? So there's a balance between coach A, coach B, promoting each other's products to the list and making sure their email lists stay the same, because you always have people unsubscribing, right? If it's lopsided and you have one person always promoting everybody else, but there's no reciprocation, then this list is just going to dwindle. It's a numbers game, right? And he got tired of dealing with that because it's not really his main business. He's more focused on his software now, this webinar fuel that he created. So that's why he wanted to sell. And obviously we were interested because it fits right into what we're already doing. Now, here's a little overview of, let me go to the dashboard. This is Entreport. This is, let me see. Okay. What is that? Email server maintenance. Okay. So this is the system called Entreport that is used to manage emails. So when a promotion goes out, and I'm sure everybody on the call has done this, right? You see an ad on Facebook, you're interested, they ask for your email, then they show you a page, and then you decide whether you buy or not. But most of the time, right, the email is very valuable for marketers. Why? Because now we have a way of contacting you. As you can tell here, we have 2,029,513 contacts inside of Entreport. So we can send an email to 2 million people asking if they're interested in buying a product for $1. If they all say yes, we make $2 million. Now, of course, I'm simplifying it, right? That's never the case, but that's really what we have here. And not only do we have this, we also have Shorten the Gap, 300,000 emails. We also have free ebooks, 2 million emails. So we're just creating a bigger and bigger and bigger list so we can promote more to more people and make more revenue. That's the whole idea, and that's why Anthony Morrison was a perfect fit for the roll-up that we're doing.
So so would you say that the main asset of the business is these email lists? That is the key portion, and
for
then
Anthony, for Anthony, that's all we purchased.
okay.
We didn't buy any of his products because they were very hands-on. All we did was buy this 2 million contacts. Why is that? Because Anthony promotes similar things than what we already promote. So with Shorten the Gap and soon with free ebooks, what we usually promote are business opportunity offers. Hey, why don't you buy my course and I'll teach you how to start an AI-driven copywriting business, or I'm going to teach you how to build a marketing agency for the real estate industry, or so business opportunities, right? And then to a certain extent, we also do what is called personal development. Tony Robbins is a good example of that, where they create programs to make people feel happier or more grateful, or whatever it is, whatever's going on in their life, get over depression or relationship issues, or all of that. That's to a lesser extent we do that as well. And when we looked at the leaderboards, obviously when coaches do promos, there's a leaderboard. And if you're the biggest affiliate and you do the most sales, you get prize money, right? So we always look at who won the promo, who else is there with us promoting this offer. And Anthony showed up all the time, a little bit above us because he has a bigger list, right? We only have, we meaning shorten the gap. We have 300,000, he has 2 million. It's a lot, it's easier for him to sell more, right? Because he has more people that he can reach out to. But we were always close. He would take second place, we would be fourth, right? And again, that's where we get our future targets from. Those same people that are promoting the same things that we already are. If we buy them, we make our list bigger. Now, whatever revenue they were making, we are making in the same promotion that we already did. So again, going back to that, we're not adding overhead and expenses, we're just adding more revenue and more profit, right? By acquiring these people. So you can see here, right? 2 million emails, and then where was I? Let me go back. Yeah, messages. I had a here. You can see here messages, emails that were sent, right? Sent an email to. It was an email was sent and it was opened 2,382 times.
Wow.
53%, 0.53% clicked on the link. Now you can say, well, that's a bad campaign, right? Less than 1% of the people that opened it clicked on it. But look at the number. 111,000 people clicked on a link.
Right.
So that's 111,000 people that were presented with an offer.
Right.
So even though that number is fairly low, and you can see there's I can probably sort this, right? There's higher, 23%, 4%, 3%, 39%. So it kind of depends on the copy, how many people were sent, was it sent to, right? There's a lot of metrics that define, but what's more important to look at, in my opinion, is the number that represents, right? 46,571 people clicked and went to a page where there was a video playing, similar than what probably everybody here on the call went through to get on this call, right? We call it a funnel. So all these people went through a funnel and were presented with an offer. And I can't show you the sales because that's from prior. I don't have access to the landing pages and the metrics, but I can show you the P&Ls, right? You'll see what that represents in dollars. Now, to give you an idea, right? I have here from a company that we work with, they send us offers all the time. Hey, we have this coach, they're launching something new, and here are the metrics, right? And these metrics are based on prior promotions. Most of the time, these coaches do their own promo, so they know what the conversion is, and they also know what we can expect to make. So for example, and I chose this one because you can imagine if I send book profits course to somebody, I'll show you the website. It's the registration page. Imagine if we send this to the free ebooks, right?
Okay.
And we teach them how to to do these book promotions on webinar, right? And we can look at here affiliate metrics. EPC is earnings per click. So if you see here that we can expect a $10 to $20 net EPC, earnings per click. And
So just for layman's terms, so per click, so you are going to earn $20 per click?
yeah. So what they did is they looked at how many people buy on the webinar that you register for, right? And let's say there was 100 people on the webinar and 5 people bought a $1,000 program. So they made $5,000 out of 100 people that were on the webinar. So now they know the value of a webinar attendee, right? So here they know that the average value of attendees is $200. So if there's 100 people on the webinar, you're going to make $20,000 on average.
Wow.
Does that make sense?
Yep.
Now, this number is earnings per click. So if I have 1,000 people clicking on the link, I would make $10,000 roughly. Again, these are averages, but they do that based on the promotions that they've already done, right? So the net EPC and the value per attendee is an average of, hey, we've done 10 webinars, we made this much money on this webinar, we divided by the number of people that were on that webinar, so we know the average per attendee, and we had this many people clicking on the link to have these many people on the webinar, so it's roughly 10 to 20 EPC. Does that make sense?
Yep.
Right? So these are just averages. But now let's go back to a very bad email that we sent, right? Very low click rate. This one, 0.27, 64,900 people. But remember what the EPC was? Let's make it $10. So if we were to send an email to that webinar and we get 64,000 people to click.
Right. Huge money.
Yeah.
Yeah.
On average, and let it be half of it, right? That's $300,000 that we can expect from that campaign.
Right.
Just by sending an email, right? And when we do these promotions, they give us everything. They give us the email copy, they build the landing pages, they give us a whole package, an affiliate data room, they call it, where all these assets are ready to go. And all we have to do is plug it into our system in Entreport, right? Create a new automation or a message, right? And boom, we send it out.
So
Now
I'm sure
this now it gets crazy. Okay, this is a brand new promotion. Dan Hollings, maybe you know him, maybe you don't, but he did a launch a year ago. He made $70 million off of his previous product. $70 million. So this is very well put together. They have very high conversions, but look at this, 206 EPC. So their average is $200 earnings per click. So again, we go here, really bad email, 64,000 people. Imagine if we promoted this.
Right. Right.
And again, this is not just pie in the sky. This is actually happening, right? This is not something that I made up, right? This is a real AI profit pathways. It's out there. You can go buy it. You can join a webinar, right? And this is our, hey guys, do you want to promote this? We have some really good numbers on this. Even if it's half of it, right? Even if it's only $100 per click, I'm still going to promote it and make a very big profit on promoting this offer.
Right. Just on that offer alone at 64,000, that would be $13 million made. Right.
Yeah.
Right.
Yeah.
Okay. So for the investors that are on the call and that are looking at this, they're probably thinking, well, why doesn't everyone just create email lists and start marketing to people? How difficult is it to get this up and running?
Well, Anthony's been doing this for almost 12 years.
Right.
Right.
Right. So it did take him time to build this.
Yeah, Mark Lack started in 2013. So yeah, almost 11 years to build a 300,000 email list. So yeah, it's not easy.
Right.
I mean, it's easy, but it's not easy to grow it to this point, right?
Right.
That takes a lot of dedication. Like Anthony used to do weekly webinars every Thursday at 9 p.m. Eastern time, right? We're going to start doing them, but because we can easily create a new coach that can do these calls to the community, right? And he would get 500 to 1,000 people on a Zoom call, or I think he was still using WebEx, if I'm not mistaken. But he did that on Thanksgiving. He did that on Christmas Eve. Like, it didn't matter. Every Thursday he would be online and he would do a live call, right? So this takes a lot of hard work and dedication to build these things. So we're taking a shortcut, obviously, by acquiring those lists.
Yeah.
But it's not hard to collect an email, right? If you spend $1 per day on a Facebook ad and you give people a PDF that is valuable, they'll give you their email address to have that PDF sent to them. So you could start easy, but what's not easy is to build it up to 2 million active emails, people opening your emails and clicking on the links that you present inside
Right.
those emails.
Right. So it's what
That's
they
the
do with
fun.
those emails.
Mm-hmm.
Yeah. And how to convert those
Mm-hmm.
emails into actual tangible cash. Yeah, that makes sense.
Yep.
That makes sense. So in the next 15 companies that you have in the pipeline, are they, and they're all in the same sort of space? They're all in the same sort of coaching or education space?
Yeah. Yeah. We have quite a few smaller acquisitions. Same thing. We're just buying a product, and we're buying a list. And of course, actually, this is a good point, right? This is Dan Holling's product. We don't own Dan Hollings's company.
Right.
So we still, when this money is made, we owe him, and we only get our commission, which is typically 40%, right? So
Right.
he makes 60% off of this.
Right.
Now, that's why we're interested in acquiring these businesses, because then we get 100% of the revenue. We don't have to split the commission,
Right.
right? So if we were to buy Dan Hollings's company, then this money, the 562 per attendee, is ours to keep. When
Right.
we promote it to our list, now we have to, of course, we split that revenue with him. So
Right.
we have quite a few smaller where it's the same, a product that we like, a list that we can add to our main big list. And then we have some larger companies, that are in the 25 to 50 million a year range. Obviously, we'll take a lot more cash to acquire those businesses, but they're also similar. It's the same thing: education, an online course, and a list of people that we can promote to.
Right. So just noticing the time already. So I just wanted to open this up for anyone. If you have any questions and you would like Gus to answer those questions, there is a Q&A section that you can click on, and you can put your questions in there, and that will give us a chance to get Gus to answer live any questions that you might have. So feel free to utilize that. Okay, so we've got 15 in the pipeline. What is your trajectory? Like, how long is this promissory note offer going to be available?
I don't have a timeline. I don't have a maximum number that we want to raise. It is more about velocity, I think, and
Okay.
waiting until somebody else comes in and starts competing with us. Because right
Right.
now, nobody's there, right? So we are still able to strike really good deals with people because there's nobody else bidding to buy that company.
Right.
So currently, the pipeline that we have would require roughly 70 million with the deals that we're negotiating to buy those. But once that is done, I guarantee you there'll be more that are of interest, or maybe not. Maybe that's it, and maybe the good deals are gone, and now there's other companies bidding for these acquisitions, and we're out. Who knows? I can't predict that. But I think as long as we find good targets and we can strike good deals with those people, where the profit margins are high, and it doesn't take us, 30 years to pay back the cost of acquisition,
Mhm.
then we'll keep going. And would we need notes forever? Probably not, because as you can tell, right, just Anthony Morrison can spin off so much profit that we could use that profit to buy the next company. But it's never a bad idea to do a mix of our own capital and notes, right?
Right.
That's never a bad idea, as long as the profit is there to cover the interest.
Right.
So I don't have a timeline. Um, I I'd be surprised if we stopped before the end of this year, but it's possible. I don't know.
Right. Okay. So really, that's the main aim is you're trying to speed up the process by giving these promissory notes and raising capital to put
Oh yeah,
towards this so that you can buy these companies faster before somebody else gets into the market, right?
yeah. Oh yeah. Yeah, if
Right.
you look at Anthony, and I'll show you the P&Ls, right? There's 10 million a year in profit. So we could say, well, let's just stop buying companies. We'll just pocket out the 10 million. And once we have 10 million, then we can go buy another company. Well, yeah, but that's going to take me 12 months,
Right.
right? So then all the good deals are gone, maybe. Um, so we don't need it, but it speeds up the process and it allows us to build a bigger portfolio much quicker than if we were to self-fund everything.
Right.
It's the same, it's kind of the same thing as, companies going public. Why do companies go public? Because now they have almost, they have a spigot and can turn it on if they need cash. Um, and if they do well with that cash, then the stock goes up, everybody's happy, more people buy stock, and now they raise capital that way, right? That's just how business works. The more cash you have, the faster you can grow.
So I had one question from a client yesterday asking about the investments. If for some reason, let's say, to get some of your investment money out of something else to put in on these promissory notes sometimes takes a little bit of time.
Mhm.
So this one client was asking about if I wanted to put some money in today, and let's say I put in 50,000 today, but in 2 months I have an extra 100,000 or 250,000, whatever the case may be. Could I then buy in again? Can I buy in multiple times?
Oh, of course.
Yeah.
Yeah,
Okay.
it would just be
Perfect.
a new note that starts on that day for the next year, 2 years, 3 years. But oh yeah, and they would have their own interest payments and timeline. But yeah, of course. I mean,
Okay.
as long as we're taking notes, then yeah, of course.
And then one of the other questions that I'd like to bring up, which I know you are a relatively modest man, I would I would like to bring up your background. So your background is in product development, and you have been working in this space for a number of years. Could you give us a little bit of background as to why you're able to be so successful with this?
Yeah,
So,
I think, yeah, just in general, I think I've been an entrepreneur since I was a kid. I love business just because it creates opportunity. That's kind of my word. And it creates experiences for people, whether they are part of the business or they are on the receiving end as a client. And I take great pride and joy in seeing a good company deliver good products, because
right.
it just creates opportunity for people. Um, Again, internal as an employee or a contractor, or as a receiver of the products. Um, so I've been an entrepreneur for a long time, and then I got involved almost by accident in growing, or I was asked to help grow coaching program that had 300, I think, yeah, 300 clients that were doing a couple million a year. Um, and I was asked if I could help them grow it to 5,000 members. We did. We actually, went bigger than that. Within 6 months, we had 6,000 members, paying members, and that company did 60 million in 1 year.
Right.
And it was just because I didn't look at it as a coaching program. I looked at it as a company, just like everything else, right? Because if you could probably guess, a lot of these coaches are like artists. They have this thing that they're really good at, and they're good speakers, and they're good on stage, and they're really good on camera, and they can put up a show, right? They put on a show and people gravitate to them, but they think like artists. So a lot of these coaches don't really understand business, and there's a lot of young kids too that go online and almost accidentally become successful. They start making millions of dollars, but then they lose it all because they have no idea how to actually build a business.
Right.
And I think my background in just business in general, combined with my affinity and desire to impact and create opportunities, which happens in the coaching space, makes this the perfect fit for me. And
Right.
then now inside of Toolbox, having the opportunity to then take our experience in acquisitions and venture capital, private equity, and mix that with this industry, it's
Mhm.
like, yeah, a perfect match, I think.
Right. Perfect. Thank you. Thank you for sharing that. I know I pulled you away from the Morrison profit and loss sheets. So
That's okay. Wait, we have 10 minutes left. Are there any questions?
we have one question that just popped up. It says, does this business generate UBIT tax?
UBIT tax. I don't know what UBIT
UBIT
tax is.
tax? That's from Chip Jones. Chip, maybe if you could, let me just actually look this.
Well, if I mean, I can answer the tax side of things, right? The way the notes are set up, the interest that you receive is considered ordinary income because
Right.
you get monthly payments. So when you invest as a person, you're going to have to report that income as ordinary income on your tax return, and you're going to be taxed as it's going to be taxed as in ordinary income. Now,
Right.
what I would always suggest with things like this is, use money from a self-directed plan that you have, if you have one, because then there's a tax deference happening, or do it as an LLC. So you have ways to minimize the taxes that are levied on that income.
Perfect.
Now there is that we are working on kind of a secondary offer, but our attorneys are still figuring that out, where it would become a convertible, it would become convertible equity. So you would be taxed on the capital gain, but that's not ready, and uh, it may not work. We're just figuring out the legality of all of it.
Right. Okay. He did just comment that it means unrelated business income tax. So I don't know if that, but that already explained the tax side of
Yep.
things.
Yep.
Okay, so P&Ls. I want to see the P&L.
Yeah, sure.
Sorry.
It's okay. I'm sure a lot of people want to see this because I'm talking all these big numbers,
Yeah.
right? If you the reason there's two columns here is because his team, his accounting team, his accountants split up the money that was made or was related to the list and the promotions from other activities that he had inside of the business. So
Can I ask a
to
favor?
give,
Can you actually zoom in just a little bit?
I don't know if that works here. Let me see.
Yep. Right. If you scroll down to the bottom of your page, it'll show.
Oh, here.
Yeah. There we
Yeah,
go.
there we go.
There we go.
Right.
Okay, perfect. Thank you.
Yeah. So on the income side, you see in 2020, he did 12,800,000. And then on the bottom, 7 million. And that's because he had quite a bit of expenses here.
Right.
Um, so then the next year, I think he was getting better at affiliate marketing. And you'll see 13 million led to 5 million. Still not that impressive. 10 million on the top.
Yeah.
4 million in the bottom. 10 million in the top. 9 million. So he's
9
doing
million.
he's doing a lot. Last year he was doing a lot more of this affiliate marketing. See,
Yeah.
everything here is less than it was in the beginning, right? In 2020, in this column here. So this he's really leveraging the list. And you can tell, right? But with a $10 million income, this
Yeah.
is only from January till October. They're still working on the fourth quarter. They haven't finished yet for their 2023 taxes. But in October, he already did 10 million top, and that resulted in 9.7 million in net operating income.
Right. So
He obviously, you can tell as he moves through this idea of, oh, this affiliate marketing stuff is actually working a lot better than just promoting my own courses.
right.
Because again, he's very hands-on, right? So he needs team, he has expenses to deliver that. But as he was moving towards more affiliate marketing, that the expense side just diminished, and
That's
his
actually
profit margin went up.
That's actually a good point to bring up too, is that with this particular roll up, the whole idea behind the roll up as well with acquiring all these companies is to utilize the expenses across all of those companies too, right? So you're not
Of
you're not
course.
having expense on each company. You're actually
No.
using a centralized system for all 4 businesses at this point.
Yeah, and there's other ways, like for example, as you can imagine, with 2 million emails, Entreport really likes this account, right? Because
Right.
the expense for that platform is based on the number of emails that you send and the number of text messages that you send. So now I had a conversation with them this week about moving all of our lists from Shorten the Gap, free ebooks, all to Entreport. Right. So now I'm consolidating that. The team that is handling Entreport can now do the same work for Anthony than, or for Shorten the Gap list, for free ebooks list, than they were for Anthony. So
Right.
the same team, like I said earlier, it doesn't matter whether you send an email to 1 million people or 10,000 people. It's the same work. You
Yeah.
write the sequence, you click the button, and off it goes, right?
Right. Perfect. Perfect. All right. I don't know if there's anyone else that has any more questions. We have 3 minutes left in our webinar. If you do have any more questions, definitely put them in the Q&A, and we'll try to make sure that we can squeeze in those questions right before the end. So just to give a little bit of a recap, we have promissory notes. They are convertible. They're available in 2-year and 3-year notes. Is there a cap at how much somebody can invest? I got that question yesterday as well.
Yeah, in our PPM, we have to put a number in, so it's really arbitrary. I think it's 20 million.
Oh, I see. Okay, perfect.
Mhm.
And then those payments, those monthly payments that you get. So let's say if you're investing 250,000 on a 3-year note, you would get 4,166 a month. So it works out to 50,000 annually, which is essentially 50,000 divided by 12 gives us 4,166.
Yep.
And then you pay that out every
Month.
month.
Yep. Around the first of the month.
Okay.
On the first, unless it's on a weekend. Yep. And we
Right.
do that through wire or ACH. If you choose ACH, it may be a 1 to 2 day processing time. But yeah, it's very easy. We set it up and it just gets paid every month.
Perfect. And then if anyone is interested in seeing the actual documents for the promissory notes, we can send those to them as well. And then they can have their lawyers look over that, or their accountants, any of that kind of information. Yep. Okay.
Yeah, it's all organized on a web page where you can view and then go sign them if you want to participate.
Right. Okay. And then if somebody does sign up, how long does it take to get processed?
You mean when do we pay the first interest payment?
Yeah. So like if I
Yeah,
sign up today and give you my documents, when would I be receiving my first payment?
yeah, first of the next month. So
Okay.
the first payment may be prorated based on when you jump in, right? If it's middle of March, then we'll pay you half of 50% of the first interest payment on the 1st of April.
Right.
But we always pay on the first of the next month after you invest.
Right. Okay, perfect.
Yep,
And I'm assuming it's prorated on the day that you receive the funds, correct?
correct. Yep.
Okay.
Mhm.
And if somebody wants to do a self-directed IRA, how do they go about doing that?
Yeah, first of all, I always recommend make sure to check with your custodian that they would allow investments that are outside of their bucket of investments, right? Because oftentimes they call themselves self-directed, but it's self-directed only in their portfolio, right? So you can pick and choose as long as you stay within this basket. Um, so a true self-directed allows you to come up with your own investments. So you have to check with your custodian first. And then if they are a true self-directed custodian or allow self-directed investments, then we would have to fill out paperwork and get approved by them before they would send funds.
Right.
Yep.
Okay.
Yeah, and we went through that already, not with a custodian, but with a trust. So somebody was taking funds out of their trust into one of these notes, and
Right.
we just had to fill out paperwork, get approved before they would say yes, we'll send those funds in.
Okay. And then another common question that I get is how much have you raised so far?
Well, we hit 1 million.
Ah, nice.
Yep,
That's different
we
than
hit.
yesterday that I heard.
Uh-huh.
That's awesome.
Yep.
That's awesome.
Yeah, we did $1 million so far in 1 month. So not bad. I'm super happy about it.
Right.
Because it is helping us speed up this process, right?
Absolutely.
Mm-hmm.
All right. So I asked too many questions and kept talking. We are now 2 minutes over.
Oh, that's
So
okay.
my apologize. Thank you very much, Gus, for answering all these questions. And just to let everyone know that we will be offering another webinar next Thursday as well. And you will see an email that'll give you the highlights of what we'll be talking about. And an hour prior to the webinar, we will send you out the Zoom link so that you can join. So look for
We'll
us then.
fix the camera issue by then.
Yes, sounds good.
All right.
All right. Thank you so much, Gus. We appreciate
Thank
it.
you. Bye-bye.
Bye.